All right. Hello, folks. Tim Davis coming to you guys with another early morning market update. And right now, again, it's early morning hours on March the 30th, 2023. Today is Thursday, folks. And this is a 4-hour chart that I'm going to be examining the Dow Jones futures, the S&P futures, and then we'll take a look at the VIX because the VIX has been showing us, giving us an advance warning of what we could expect after we've been enduring this nice little short-term rally in our overall markets. All right, point something out real quick. You look at this Dow Jones chart, you see I have two trend lines drawn here, and those trend lines represents areas of support or resistance. As we can see on the left side of this chart, right around let's say the end of February. You see we came down as we were in a downtrend at one point, and we started to straddle this upper level. It was using that level as a level of support at that point. We broke through that level, came back up to test it here. And you see what happened. We came back down to the lower level and established a, oops. Hold on one second, folks. All right. So we established another level of support, the lower part of that range. Then we got to rise back above this level, and we pretty much petered out at an extreme upward move above this level of resistance. Now, former resistance becomes support on the way down. And if we break that, we have to look for the next level that we would use as support resistance in the past. As we can see over here, this was support here. So on the way down, this is going to be support. And if we break that level, we just establish another range. So now, every time you break a level of resistance, support, and now becomes resistance on the way back up, you'll normally struggle there for a bit before price action decides to break it. So we tested this level of resistance after it became resistance a couple times. Then we went back into this range, battled with this level of resistance, came back down. Then we got a nice move back up and back up to the top of the range again. So now we are right back up to, this is where we stand now, back up to another level of resistance. Now, last time we had this type of scenario was right around, I'm gonna say, a little better example, right around here. So a strong push. And the reason why I highlighted that area, because if you look below, and I have RSI all the way at the bottom, like for a lot of folks, I like to use RSI. And RSI is a good gauge to take a look at overbought and oversold conditions. Overbought on RSI is a level above 80. It's a level above, level above 70, a level above 70. Anything above 70 is considered an overbought territory. Right now, RSI on a 4-hour chart is pressing about almost 80. Last time we got as high as 80 was right around here. And we were at this extreme mode for a couple days. As you can see, about 3 days we were at that extreme mode. And then what happened? Then the sell-off. Boom, stair-step sell-off. Whoop, boom, boom, and down to the extreme. So I said that just to give you guys a heads up, I said you can't fall in love with these bear market rallies these bull market rallies within a bear market, because they're going to be met with some fierce resistance. So once if you're playing this thing bullishly, get some decent profits and wait for the next leg lower, because I think we're possibly in store for that very, very soon. Now, so we saw what happened back at the beginning of March. Now look, as we approach the end of March. So I think as we approach the end of this weekend and next week, we could see some selling pressure on the markets, because as we saw with this extreme over here, look at where we are now. back in overbought conditions by looking at the full stochastics, grams percentage, see us in overbought conditions, see the TTM squeeze, which is the momentum indicator, telling us that the upward movement is starting to fizzle out. With see these dark blue bars. Then look at the RSI. That's one of the biggest telltale signals, RSI, and also where we are as far as support resistance. But look at the RSI. Back up into overbought conditions. And right now, showing a rating of around close to that 80 again, 77, 70, 78, pressing around a level. So we are at the extreme level on this 4-hour chart and overbought conditions. And we made it right back up to this level of resistance. We got rejected before back here. That's about a week or two ago. Popped up to the level and got rejected. We tested that level back here a couple weeks ago, got rejected. So that's a rejection there. Here's a rejection here. And the question is, did we get a rejection here? I would say more than likely we do, somewhere around here, because we're in overbought conditions already. Already in overbought conditions. So more than likely we'll probably get another rejection here. And then if we do get that rejection, the next thing to watch is how far do we go down? Do we go back down to test this level of support, which could take the Dow Jones futures back down to about 33,000. Where are we at now? Let's see. I'm sorry, could take us back down to around 3250. We are already below 33,000. That could take us back down to around 32,500. Very close to that level, around 32,500. Right now we're at 32,950. So this could take us back down to that level. And then the question is, if we travel back down to that far, what happens next? Do we break straight through this level of resistance, support, like we did here? Like we did here? We'll have to wait and see. But I think we're definitely going to be take the first action and head lower towards that 3250 between now and next week. So that's something to pay close attention to. That is a possibility. Okay, nothing is etched in stone, folks, but just let you know that is a possibility because we are in overbought conditions again. Now, I want to breeze right through the S&P futures just to show you guys the same type of setup. Here's S&P futures again, and look at this one. Look at this extreme. Again, overbought conditions, and now it has an RSI reading of 81. RSI read of 81. That is extreme overbought conditions on this 4-hour chart. Extreme overbought conditions. The last time we got that extreme, it's back here. It's a couple weeks ago, and we see what happened once we hit that ultimate extreme level. Peter sideways for a few days, and then, actually not even for a few days, probably about a day or so. Then we petered off right back down through the second level of support. Tested that again here and just plunged much lower. Almost back down to a third level of support. Then we rally back up. So now the key is what happens next. We are in extreme overbought conditions again. And we're hovering right around 80%. The 80 level. RSI showing a reading of 80, 81. So what happens next? Pay close attention to what happens throughout the day, folks, when the market's open, because we are in extreme overbought conditions on the 4-hour chart. And again, so far, price action has been failing at around this level. We've been failing at this level and been pulling back. So we're in overbought conditions. The more likely scenario is that we pull out of overbought conditions and start to trickle lower. And again, the first level of support for the S&P futures is right around 4,000. Looks like it's right around 4,000. So pay close attention to that today. Do we head back to 4,000 or do we break lower? Because the ultimate level that we've been ranging at is between 3,900 to 4,100. So do we plunge all the way back down to 3,900? That is a huge possibility. So watch and see if we break through the second level of support over the next week or so. Do we break through it completely and continue down, or do we come down to it and straddle and go range bound around it? I was a bet man. I would say we were probably going to end up breaking right through this 4,000 level. That's a possibility. We got to see what happens. That is a huge possibility. Right now, folks, we're definitely in overbought conditions. Now, another reason why I say we could end up much lower is because of VIX. Look at the VIX, folks. The VIX has been a good signature indication of how things could go. VIX got as high as 30, almost 30, not too long ago. VIX almost as high as 30. And what I told you guys on the previous VIX video is that when VIX start to form these gaps, even on the short-term 4-hour charts, pay attention to these gaps, because those gaps normally will find a way to fill. Here's gaps right here that we see that I just circled. And when we got to this extreme level on the upside, we started to come down, and then we gap down right here. And what happens? Price goes right back up and forms another gap on the way up. So on the way up, this gap, get rid of some of this mess. So back down, there's a gap. So normally gaps fill. What happens? We push back up, gap. There's an open gap there now on the upside. Then we come right back down to fill this entire gap on the way back down. So what happens on the way back down? I guess about a week or so ago, we get another gap down here. Back to the top of this range. You guys have been following for a while. I told you this VIX is showing a strong level of support right around this shaded area after we broke out right here. It's been showing a long, strong level of support. But there's a gap here. So what happens? Price action goes back up until we fill that gap. Almost 9 times out of 10, every time, almost actually 100% of the time, you're going to see gaps fill in the VIX. So what happens? We get a gap down. So from 30 all the way back down to 20 again, folks, right at the top of a range, a level of support, which used to be resistance, is now this whole area. I'm calling it an area of accumulation. Either we're going to accumulate around this, close to this level, and get a pop, or then accumulate and sell. I think we are at the bottom of the VIX. The VIX is too low right now. At the bottom of this range, we're still in the bear market. So with that said, we got this gap here. You saw what happened on the other gaps. There's a gap here. I'm going to, put my neck out there and say 100% of the time, you're going to see gaps fill on the VIX. Sometimes they happen quickly. Sometimes it take a while. Sometimes it happen quickly. And so far, these gaps have been filling pretty quick. Gaps have been filling pretty quick. So where to now for the VIX? We could start to see the VIX trickle higher as we start to see the opening bell on later today. And as we travel through the rest of the trading day today, then tomorrow, then we got next week. And I already showed you guys what the setup is showing on the Dow Jones futures and the S&P. We are in overbought conditions there. And now we are in oversold conditions on the VIX as well. It's looking at this gap here. So that means we're going to end up filling that gap. Signs show that the downward pressure on the VIX is starting to lose its flavor, lose its momentum. So the momentum is about to switch in favor of the VIX. Look at the RSI on the VIX. Normally when we hit these over, and this has been almost happening, perfectly. Every time the VIX has been hitting these oversold conditions, anytime you see oversold conditions with the RSI, it's normally an RSI below 30. And every time the VIX has been getting these RSI below 30, they find a way to get a little bounce. And some bounces are more extreme than others. And I think we're probably in the more extreme side because the VIX has really established a firm level of support after breaking back above this shaded area. So we could see we could see an extreme move to the upside on the VIX at the C. And definitely we are in oversold territory on the VIX. Look at the RSI, we're in oversold. Supposed to cast is oversold. Wins percentage oversold. So if you have any long positions that coincide with the overall market, as we approach the end of this trading week. Might want to consider, trying to rein in some of those profits, especially if they've been following the S&P to the T. Some stocks have been going against the grain. You have to pick those out on your own. But the overall momentum of the overall market is like it's about to shift as we head towards the end of this week and beginning of next week. So again, just wanted to point that out, folks. Hopefully this is information that you can use. Until the next videos, Tim Davis signing off. Enjoy the rest of your morning, folks.